Hey guys, you've joined us at Moneycontrol. I'm Manisha Gupta, and the headline clearly coming in from the gold prices where we are trading above $2,000 per ounce. So it clearly has been a higher high that we've seen in the month of October and now in case of November as well. So take a look at the prices. We're trading at almost 2015, which is a 6-month highs for the gold prices. And we have seen 1.5% of gains come in for the month of November. This is building up on what we saw in the month of October, where the gold price is also gained up by almost 7%. Well, there has been a supportive statement from World Gold Council as well, suggesting that 1.5 tons of ETF buying is what we've seen in the previous week. This is a second straight week of ETF buying as well coming in for gold. And that is the latest Goldman Sachs report, which suggests that their 12-month price now targeted is at $2,050. This is higher than $2,000 per ounce. So clearly supportive and bullish trends coming in from there. Markets have seen safe haven buying coming in, and for this week itself, it's going to be about the ISM manufacturing numbers, personal income and spending from the US markets that the street will take a cue from. The dollar index is trading at a 3-month lows, and that in turn also has been supportive for gold. And even after that, it is going to be about the sovereign gold bond redemption that the street will keep an eye on. Let's put all of that on limelight, and joining us to discuss all of that is Chirag Sheth from Metal Focus. Chirag, hi, thank you so much for joining us. First of all, on the prices itself, and what a strong gain. And the important thing is that after trying multiple times, we have the gold prices now holding above $2,000.
No, absolutely. I think market, currently is absolutely focused on the geopolitics, and what we are seeing is currently, with every passing day, geopolitical premium building into the prices. So obviously, the fact that till the point that the market continues to remain on geopolitics and premium gets built into, we will see, prices continue to trade about $1,950. And probably we could, in coming days, if things, tend to move in the similar direction, we could also see new highs. So I think gold is pretty much behaving the way it should behave in such a volatile scenario.
Chirag, how are you looking at the buying coming in? Because the ETF buying finally has started to begin in. We've seen strong imports into India for the month of October. We are still awaiting the month of November numbers here. How do you look at the overall buying scenario?
I think, from an India point of view, if you look at, we are as it is into an important quarter in terms of gold demand from India, both in terms of investment, but also in terms of, jewelry buying. So I think, and the fact that, after the correction that we saw at the early part of the quarter, we've seen, prices moving in. So a lot of people who were probably waiting on the fringe lines or on the sidelines, have actually now started, buying gold.
Chirag, coming on the fact that we've seen the silver prices gain up quite strongly as well. It's a 2-month highs onto this one. We've seen near 7% of gains in October. So do you think the precious metals will move in tandem?
I think so. Silver tends to take cue from both gold as well as base metals, and especially in a scenario where base metals is not doing much as such, the correlation with gold has kind of strengthened, and all of us know that silver is far more volatile. The beta is much higher, compared to gold. So obviously, gold is going to react by 2 to 3%. We will very well see silver react by much more, ferocity. So again, both gold and silver playing out with the way it is expected to play out.
Chirag, for India, the headlines would come in on November 30th, where we do know that the first tranche released in November 2015 comes in for redemption. And the numbers are quite huge. I mean, from where you bought it at less than 3,000 to where it's trading at above 6,000 right now. How have you seen this journey?
No, absolutely. I still remember the first, tranche being launched, and I was among one of the few investors who did buy in the first round. So obviously, everybody is pretty happy with the way, gold has obviously moved. But also, Manisha, something that I've said, repeatedly, that I think now sovereign gold bond in last, 7-8 years has now become an important aspect in one's portfolio. We have seen increasingly, individual investors, high net worth investors looking at sovereign gold bond as an important alternative. Because here, you're getting two things, right? You are getting interest and you are getting also the appreciation that gold gives. So, it's like a cherry on the cake.
Oh, yes. So, while we have seen strong gains, if you look at the CAGR, it's almost 11% in the last 7 or 8 years. Do you see that kind of performance continue, or would you taper down your expectations a bit?
No, I think probably important to understand that there have been two important aspects why gold prices in rupee terms have also done what they've done, right? So one is obviously the increase in import duty that we saw during this corresponding period, and also the fact that depreciation of the rupee, which has been pretty severe in last probably 3-4 years, So while we do not expect this kind of depreciation in the INR, and obviously none of us are looking at further import duty increases. So yes, if things remain as it is, then probably we may not see this kind of appreciation going in. But given the fact that these investment is in rupee, it always gets impacted by the vagaries of the USD INR.
So finally, would you still advocate that 8 to 10 to 15% of your portfolio should be in gold, and within that as well, sovereign gold bond perhaps is a better bet?
Look, I've always said this, one's portfolio should have, gold. It's an important diversifier. Now, there have been a lot of instances in the last 15-20 years which have proved that, starting from the dot-com crisis, the subprime crisis, or even during the COVID crisis, gold has outperformed. So I would say anybody 5 to 10% is the minimum. And obviously now, your question about sovereign gold bond, it depends on what is the motive. If you're looking at investment, then ideally one should either hold it physically or in, paper instruments like sovereign gold bond in ETF. And if you want to use it as an adornment, then obviously jewelry is the form to buy it.
Oh, well, absolutely. But gold should be in a portfolio whichever way you like it. And as Chirag also said, and various other financial advisors have been suggesting that in last many years, gold clearly has been at the break-even or much better than various other funds that have been into the market there. Chirag, as always, thank you so much for joining us and making sense of what really seems to be happening in case of gold prices right now.